Hi, I'm Pat Ballin, and joining me, James Gauthier, is the Chief Investment Officer at Justwealth. James, we all knew that this was going to be a volatile election. What have you done to ride it out?
Well, it certainly has been volatile. If we take a look at what happened in the markets last week, we had the worst sell-off we've seen since the COVID crisis initially in March. And then we saw what happened Monday and Tuesday of this week, and potentially what could happen today. Three very strong up days with really no new change in information, which is kind of irrational. So what we've been doing is nothing. There's no sense trying to predict the irrationality of short-term markets. So we're just going to continue to stay as is until we have a little bit greater certainty in what's going on.
What political developments, in your opinion, might hurt or help the stock markets?
Well, markets typically don't like uncertainty. And right now, there still is a fair amount of uncertainty regarding political developments. Obviously, an outcome or resolution to the election would be an immediate source of relief in terms of uncertainty. And hopefully, that would provide a boost to the markets. Once the politicians get back to work, there are a number of things that are still on the table, one being a stimulus bill. The passing of that, which has been basically deferred from prior to the election till post-election, if that comes through, that'll be a large economic stimulus, which is typically good for markets. But there's also the issue of the antitrust issues involving big tech. So the Googles and the Apples are all under scrutiny. And depending on how that goes under the new administration, that could be a negative for the tech sector. Not the markets in general. But overall, I mean, I think the political developments pale in comparison to the biggest issue, which is the coronavirus. So it's not really a political issue, even though the politicians are involved. But once we get some resolution to how we are going to eventually overcome or win this battle against the coronavirus, is going to be the biggest source of a boost to the markets, I think, in the future.
Okay, but when you invest, what's your typical timeline? And then have you changed it at all?
So, well, I think there's two views, I would say, when we talk about timelines and investing. We create portfolios for our clients to invest in. We have a lot of them. We have about 70 odd portfolios that we can use to invest in our clients' assets. And we use a very long time horizon to create those portfolios. Using a long-term time horizon allows you greater predictability in what the outcomes of those portfolios might be. So we want to focus on what's on the road ahead, not really what's in the rearview mirror. We don't look at historical returns or care too much about that. But we do want to make sure we have portfolios constructed appropriately for the long term, where we have the greatest amount of predictability. But when it comes to actually implementing for clients, every client is considered individually. They all have their own timelines, and we have to respect that. So we don't manage one fund and everybody gets the same thing. Every client is treated individually, and we manage to their timelines, whatever that might be.
Okay, so what do you intend to do for your clients' accounts next, if you will?
Well, given where we are in the calendar year, I think the next item on the agenda is tax loss harvesting. This is the season for it, late in the tax year. I think the lack of an outcome from last night might delay our implementation a little bit. Typically, we get started in November, but we're going to wait until the outcome is settled for the U.S. election, and then eventually start implementing tax loss harvesting before year end.
James, thanks so much for your time today. Good luck in the
Oh,
next
my
little
pleasure,
while.
Pat. Thank you very much.